How to know if something is an asset or a liability? Are you an asset or are you a liability? What is the distinction between an asset and a liability? Well, if that is something that you're interested in knowing about, we are going to be discussing just that in this space: asset or liability, assets over liability, but never liability over assets. Let us get on the inside. When we speak of asset, in simple terms, asset is anything that actually adds value to you. So an asset is something that makes you money. In short, that is exactly what an asset is. And the simple definition of a liability is something that takes away money from you. So something that is not paying for itself, it is leaving you with a negative cash flow, that there is a liability. So you may be wondering to yourself, am I an asset or am I a liability? Is this item an asset or is this item a liability? If there is a place that you are going and it's not adding value to you, it's not making you better, it's making you worse, it's derailing you from your goals and your objective, that place may be a liability. If you are going to some place that is elevating you and holding you to a higher state of consciousness, then that there may be an asset to you. If you are surrounding your friends who are doing things which you have not done but desire to do because it is good, then those friends are assets to you. If you're in a group or relationship that there are people leading you down the path of unrighteousness, decadency, that there is a liability situation. And you have to try to stay away from those situations. So now let us come back to the money. People who are liabilities cost you a lot. People who are assets add value to you. So let's look at it like that. An asset is something that puts money in your pocket. An asset is anything that has a value and is owned by a company or an individual. And the reason why we're talking about a company is because I don't want you to only consider yourself as an individual. I want you to consider yourself as an entity. That way you can reap greater rewards from the taxation system. Hence, I'm going to encourage you to think or even consider starting a business so you can funnel the money through the business as it add value to other persons. So you are not directly taxed, but the business is taxed and you reap the rewards from that taxation exercise. An asset includes like your cash, investments, your real estate, your equipments, whatever you have in your homes that has value. Assets are important because they can be converted into cash or used to generate income. So if something is not generating income, then it cannot necessarily be considered an asset. And assets are resources that have value and are owned by an individual or a company. So let us look at some concepts of assets and types of things that may be considered to be assets. Now, let us get into it. So cash and cash equivalent. These are liquid assets that can be easily converted into cash, such as cash on hand, which is cash, money in checking account, which is cash, or saving account, which is cash. Short-term investment, those are assets that you can actually liquidate and get money within a short period of time. Now, number two, accounts receivable. So it's like leaving money on the streets. So as an individual, you want to leave money on the streets because you may never know when you have to go to the streets to get some money so that you can continue your life in the lifestyle that you are accustomed. So there's always the necessity not to take everything, but to leave some so that you have people around you who are willing to support your endeavor. If you're Jamaican, you understand exactly what I'm saying. If not, then just understand the basic principle of accounts receivable. These are accounts that are owed to a company or an individual by its consumers for goods or services that have been delivered but not yet paid for. So you give someone something, they have not paid you for it, you basically don't necessarily write it off, or you may in some instances write it off, which means that the money is still to be collected to a degree, but it's not collected. So when the time comes, then a favor can be given for that compensation which was written off. So those things are account receivable from an individual perspective. Then we move down to number 3, furnitures and equipment. Equipment is a tangible asset that is used in a company to operate. You may also have equipments in your home that you use to make your art, your craft, that you're going to be using in your business, because you're not going to consider yourself an individual, you're going to consider yourself a business, that you can write off that equipment that you have as you use it to generate funds for your business, and then your business can pay you after all the expenses have been taken care of. So the place that you would rent, your business will be taking care of it. The lease agreement, your business will be taking care of it. The car that you're driving, the supplies that you use in the business, your business will be taking care of it. Paying the staff, your business will take care of it. And then after the excess outflow, that is where you will enjoy the riches and the bounty. So then we have intangible assets. These are basically non-physical assets such as patent, trademark, and copyright. So like this book right here and this book right here, these are intellectual properties which we hold the copyrights to. And indeed, these are intangible assets that we also receive royalty from when they are sold or they are purchased. Then we have deferred tax asset, and these are tax that represent a future tax benefit that a company or individual is expected to receive. So in some instances, you may consider some investment like your traditional Roth IRA account to be a deferred tax asset, because you do not pay taxes now. You get a tax write-off, which lowers your tax burden. But when you take it out, when you reach 65 or 67, depending on the age at the time of retirement, then you are allowed to take it out. But at that moment, it is taxed. But by that time, you should be in a lower tax bracket so that it is negligible. So you still hold or have gained a saving. Then we have investments. So investments are the assets that are intended to generate income or to increase in value over time. Example of investment includes the stock, bonds, mutual funds, and real estate. So yes, these are examples of assets. Then we have our properties, and I love properties and I love real estate. You know why? Because property is a tangible asset that has value and can be bought or sold. Example of a property includes like the real estate, such as land and buildings, and personal equipment, such as cars and jewelries, property, plants, and equipment. This includes the tangible assets such as land, business, machinery, and vehicles that are used in a company's operation. So if you decide that you no longer want to just be an individual, you want to be an entity, then you can reap the benefit of this asset, this property portfolio. Then we have intellectual properties, number 8, which we mentioned in reference to in a previous statement. And intellectual property refers to intangible assets. Yes, so those intangible assets that we spoke about that result from your creative efforts. So like if you are an innovator and you have a patent, that is intellectual property. If you have a trademark, that is intellectual property. If you have a copyright, that is intellectual property. Now we move into another asset, is the goodwill. This is an intangible asset that represents the value of a company's reputation and the relationship it has built with its customers and employees. But for an individual, if you are an individual and you have reputation in terms of you have prestige, you have integrity, that there is a goodwill as well. You are your brand. And once your brand is intact, that there is a priceless asset. But once your brand becomes desecrated, then that asset value depreciates. So overall, let us look at it. Assets are very important because they generate income or cash flow for a company and an individual, either through the sale of the asset itself or through the use of the asset in the company's operation. And yes, your time as well is an asset. How you distribute your time, that there is an asset to be considered.